Hey everyone, hopefully you're having a good day. Hopefully you're relaxing a little bit. My name's Andy. My channel's Finding Value. If you like making a bunch of money, if you want to learn about commodities investing, this is the channel for you. Subscribe to the channel. Give me a thumbs up. This channel is financial education. It's not financial advice. And today we're going to be going over fear and greed. This is a lot of new investors swap between these two very quickly. I'm going to talk about that. And if you're doing that, you should stop it. So this presentation is on fear and greed. So we'll get in here. Self-awareness. New investors can flip on a dime between the fear of losing money to the fear of missing out. This channel is here to prevent you from flipping back and forth between fear and greed and just completely avoiding those things. This is how you lose money, is by flipping between these two over and over and taking actions on those emotions. The first step, I think, is to identify if you're flipping between fear and greed. So here's the fear awareness that I've got. Do you feel like you've made a wrong decision by buying a stock and watching it go down? Do you feel like oh man, this is the wrong decision, I need to sell? Do you feel like you need to sell every time the stock goes in the opposite direction you want it to go? When you log into the account, does your stomach drop when you see losses? And that's the fear. That's you're very fearful. And the greed awareness, do you feel like you need to buy a stock when the price goes up a lot? Even if the day before you saw the stock price go down and not even have a second thought about buying it. But once it goes up, hey, look, you want to buy it now. When a stock reverses hard throughout the day, do you buy it only after it's showing in the green? Because you're using price as the validation of being right. And that's where I think you're going to get in trouble. So value and awareness. Very successful investors see trend changes before they happen. And what I mean by trend changes, I'm talking about big trends. So if a big trend is already in place, I'd probably avoid it. And when I think of a big trend, I think of Bitcoin right now or Tesla. If you are the only person buying something and people are telling you that you are dumb, then you are investing smart. I know it's contrary to what most people, because you're going to have to block everyone out. Value should guide your decisions. Value should. So long the market conditions support that new trend. Again, I'm going to read that one more time. Value should be your guide, and it should only be your guide so long that the market conditions support that new trend. Buy value into newly created strength. Buy value into strength. And those market conditions is how you identify a new trend and strength. Success is following a plan and avoiding emotional transactions. Train yourself to keep in check emotions. Emotions will do nothing but ruin your performance. Long-term trends and the ability to identify those trends is where big money is made. Investing is more about doing nothing than it is about taking action. It's about doing nothing. Companies need time in order to add value to shareholders, and if you're going in and out, you're not going to give them time to add value to your investment. It's called trading. So, what have I learned over these years? Emotions are going to kill your performance. You can't be emotional. You're going to have to separate yourself with logic and emotions and throw the emotions out and use your logic. Develop plans, develop ways and strategies to invest. Some of the most, I'll call it greatest returning investments are the ones that you just see growing in the world. If you see something growing and it just came into existence, like a Roku stick or something, and then you start seeing them going into TVs, it's like, man, maybe I just throw some money in it. And that's what I did. I threw some money in it. Let it run. If you see other companies, they're growing, like Chick-fil-A. I know it's a private company, but that would be a good one to invest in because they're always busy. These companies that you see just growing like mad, use your intuition. Like, see what it's like. If I see this growing, there's some money in it and let it go. Because those are the ones that if you can just sit in them and let them go, they'll do very well for you. You're going to have to use a little bit different techniques in commodities because then you're identifying commodity prices and the trends of commodity prices. That's what this channel is here to do, is to help you with that trend recognition, market conditions, and valuations. If you can always buy things when they're cheap value-wise, you're going to win in the long run. Even if your market conditions are off, you're just going to have to wait longer. If you've got good market conditions and you've got good valuations where things are changing and you're going to see this rotation of money, that's when you are really good. And you can time your investments pretty well. You can get value and timing at the same time, which is pretty rare for most investors. I mean, that is really what separates a novice investor from a professional investor, is the timing aspect of it. And also, I would say identifying value, because value can tell you when to buy and when to sell. And that's what professional investors are very good at. They're very good at valuing assets, and they're very good at seeing trends. So those two things, if you can master those two things, the money will come. And this is identifying trends that are long-term. It's the growth of those trends, we'll call it the impact to society those trends have. And I know a lot of people, they talk a lot about Cathie Wood. What she's doing is identifying trends, and she's speculating on how quickly those trends are adopted. And that's what good investors do, is they identify trends. Buffett's the same way. He's identifying value and the rotation of money and the trends. And that's what I've tried to do myself and really refine and get good at, is identifying trends, identifying value, and then merging those two together to get the trend and the value correct. If you can get that right, the money will come in mass. Because really, investing is nothing more than identifying money flows and the rotation of money. Assets go up when money goes into it. Assets go down when money is drawn from it. And all it does is you've got all this money out there, and it's just going from asset to asset, moving back and forth. And if you can properly identify where the money is moved out and where the money is going to move into, that's how you make money. Thanks for listening. If you guys like this content, give me a thumbs up. If you like these presentations, subscribe to the channel if you haven't. Don't know why you haven't subscribed yet. And leave comments below or questions about anything. Let me know what you think. Let me know what you want to know. Thanks for listening. This is Finding Value.